evening and welcome to EBN TV. This is the Spheres of Life. I know it has been a great week and an industrious week for you, the week ending tonight. But we want to assure you that when you come to EBN TV, this is where we talk, this is where we call home. We exchange a word to word, stories to stories that challenge one another, and we make sure that you grow through EBN TV, the Spheres of Life. We make sure that there's objectivity, there's transparency, and there is sanity in every story that we are making. And tonight we have a great guest, we have a great show and a great talk tonight with us, because we are understanding or demystifying the issues in the dynamics of insurance. I'm your host, Jeff Kamau.
And I, CAROLYNE. We are happy to have you as you are happy to have us on your screen. And it's another good evening here at EBN TV, another episode of Spheres of Life. We are tackling on insurance, where we are going to understand the dynamics of insurance with our guest, who will introduce herself in a short while. But for now, if you have any question you'd like to ask about insurance, feel free to comment on our social media platforms. That's on YouTube, The Legend Productions, or on Facebook and Instagram, Jeff SOMBA The Legend, and we'll read the comments and the question will be answered to you.
That's great. And I think, Caroline, one of these times you shall be insuring your hairstyles and different things of your life, because everything is coming into a risk, and because insurance is something that we have to hold strongly and importantly in our life. So it will mean that every aspect and step of our life shall be insured, to make sure that we have protection, to make sure that we have safety for all that we add in our daily living. So tonight we are great to have someone who will help us to understand the different terms and the different perspectives of insurance, and this is the dynamics of insurance tonight. We have on board Joyce, Kamau. Welcome to EBN TV.
Thank you so much. Yeah, good evening, our viewers. My name is Joyce Kamau. Dealing with this insurance, and that's what I do for life. And I have all the information that you would ask, maybe on the social media platforms. We have all the information, and we are ready to be engaged by you guys, and we are ready to serve you with the information. Thank you so much, Jeff, for having me at studio, and also the co-host, Carol. It's my pleasure to be here. Thank you.
You're most welcome. And I said again and again, this is where we talk every issue that affects us in life. And when you go out there, it's like the word insurance is a jargon to every member, and to actually every member of the society, because there are some times when you mention them, you feel I have to go for a dictionary. But when you go for a dictionary, the descriptions that you find there is not the description of the services that you provide as far as insurance is concerned. But before we go far into your interview tonight, we want us to know which insurance you are dealing or working with, and your position at the same insurance company.
Thank you so much. That's a good question. Currently, when we become agents of insurance, we deal with all types of insurance. And when we talk of all types of insurance, we say our license we can deal with any underwriter. I can deal with any customer. If a customer tells me they want a policy with Britam, I'll be able to offer, because my license allows me to work with any underwriter. If I get a customer who wants to deal with AAR, my license allows me. So in my position is an insurance agent, and I can sell any insurance depending on the need of the customer. Yes.
Okay, there is a word that you've mentioned there, and maybe someone is in darkness. What is the meaning of an underwriter to someone who is watching us tonight?
Okay, an underwriter is the person who takes the risk and they insure that risk. And maybe before I go to the underwriter, maybe I should explain what insurance is all about. When we talk of insurance, we are talking about protection. We all understand that we all work with a risk. Maybe it's not a risk that maybe most of the time when we talk of insurance, you'll get customers and you ask them about insurance. They tell you, I know NHIF, I know car insurance, but insurance is very wide, and it means protection, and protection from all uncertainty, loss of anything, maybe something that can lead to a loss, something, especially we talk of financial loss, because insurance, when we take insurance, we are trying to protect ourselves from uncertainties, we are trying to protect ourselves from hazards, we are trying to protect ourselves from perils, and those are loss of something, whereby you lose something financially. If at all I were to lose myself, then my family will lose financially, because there's something that I bring to the table. If I were to lose my car, I'll lose financially. That means I have something that has to be protected, and that's where insurance comes in, whereby we transfer the risk. So the transferring of the risk is what we call insurance.
Okay, that's a great explanation there. And as you talked about, actually you've explained a bit further as far as insurance is concerned. I understand there are different types of insurance or cover. And I understand there is cover, and maybe the car, what we call it, a motor vehicle insurance. I think you can try to expound a bit so that one may understand. If I want a life cover, if I want a motor vehicle insurance cover, what do I have to have, or what is the purpose, the benefit of the same?
Okay, thank you so much. When we talk of insurance, insurance is, we have different types of insurance. We have what we call life assurance. For life assurance, it means that this is something that has to be paid, either through maturity or through death. We say life insurance policy matures in two ways. Either full maturity, that means it has gotten to the end of the term, or maybe death has come in the course of the term, or maybe invalidity or disability or incapacitation. That's what we talk about when we talk about life insurance.
What is the course of maturity, or how long is the maturity?
They differ. We have as short as 5 years. Other institutions, they have as short as 4 years, and we have as long as forever. The whole life. And then when it comes,
and suppose before I interrupt you shortly, but suppose I live forever, who will be the beneficiary of my premiums, or the premiums that I do for any kind of cover that I do?
Okay, what happens? You can't live forever. At a particular point, there's a time that someone exits. And what we usually do, depending on the cover that we've given, if at all it's a life cover, there are some life covers that we call whole life. This one pays you until the time that you die. If at all, maybe you die before, you die earlier, because when we talk about life insurance, there are 3 risks that we insure in life assurance. We insure premature death, that is dying too early. Number 2, we insure invalidity or incapacitation or disability. And then we also insure if at all you live too long and you outlive your resources. That's another risk. So those are 3 risks. In case maybe you die too young, then we shall pay your beneficiaries. Then if at all maybe you get incapacitated, then we pay you so that you can be able to continue with the kind of lifestyle you are living before when you are healthy. Because insurance, we want you when you are healthy. We don't want you when you're not okay. We want you to insure before, and then we take care of you because you've transferred your risk. And then the third risk is where you live too long and you outlive your resources. And that is one of the areas that most of the people don't really take care of.
But now, which is this living too long as far as insurance terms and cover is concerned?
Okay, when we are taking people for insurance, we usually have a cover limit, whereby we say the time that you can join to take insurance, you must be insurable, because we always say we have means. When we are selling insurance, we just don't sell to anyone. We sell to someone who has money. You must have accessibility. We can be able to access you. The third thing, and that's where Jeff is coming from, you must be insurable. And insurable means you're okay, you're healthy, and then the limit that most insurance have, it's around 80 or 84 years on the maximum. And then now we can pay until the death of that person. or maybe if at all that person dies earlier, then we pay the beneficiaries. And then now we also have, you must have that need for insurance, and then you must have a sense of responsibility, because we don't just sell to just anyone, someone who will not take care of whatever it is they've insured, because maybe I can take you back to, before I venture so much into life, the other types of insurance we also have, the way you are talking about motor, it's because I know you have motor vehicle insurance, but when we talk of motor vehicle, that is in the general insurance. General insurance is where we cover property, we cover maybe, if at all it's animals, that give you cash in terms of earnings that are used for commercial purposes, where we cover crops. If it's coffee, we can cover your coffee. If it's pyrethrum, we can cover it. If it's wheat, but it is for purposes of commercial use, because what insurance does, it takes you back to the same position you were, financial position that you were before the loss. Therefore, general, we deal with non-human insurance, then we have life insurance, and then we also have another part of insurance that is not really insurance, and we call it asset management. Here it's just investments, and those are the three lines of business
before
that
we
have
get
in
there,
insurance.
maybe there's someone watching us from Kericho, and Kericho deal with coffee generally, and maybe someone may be asking or want to know what kind of acreage or size of the farm that should be captured in the cover.
Okay, actually we don't usually have a minimum size, as long as you can be able to prove for us that this business, the tea that you're planting, it is used for commercial purposes. It means that you have books, you have your records, financial records, and then we can see there's a specialist who comes to inspect your tea, and we check all those things, and then we see that for sure this is truly used for commercial purposes. Then you're good to go. We can start you off, and we start covering your coffee.
I think that is answered to someone maybe who is eager to learn something as far as the covering of farming is concerned. And again, to the issues of, I don't think it's life or what, but you may find there is critical illness insurance. There is a cover for what you earn. There is a cover, the insurance cover for death, and there is insurance cover for I don't remember the others. So I want you to expound a bit on the same.
Okay, thank you so much, Jeff. I think the line that you're in, that is the life insurance area. When we come to life, we say there are several things that can happen to you, and we know when these things happen, your life is never the same again. And the reason as to why we give cover to this person, it is not necessarily because we're insuring that person. When we talk of insurance, we talk about three areas, three pillars of insurance, and this is very key for all of us to understand that insurance has three pillars, and the first pillar is accumulation of wealth. All of us are here because we want to make money. We are trying to make a living for our children. Whatever it is that you do, you're doing it for purposes of earning a living. And that is accumulation of wealth. Number two, we have something that we call protection of wealth. When we talk of protection of wealth, whatever it is that I have, and I as Joyce being the first asset that my loved one have, because in case I am not there, I'm not able to do what I do, even if I have a husband who maybe takes care of my kids in this area or this area, and someone might be asking themselves, I am not married, but I'm working. So there's no one who loses. If they were to lose me, there's nothing that they will lose. No, there's someone that loses financially if you are not there. Reason being, I know there are times that your mother will call you and tell you, the floods have been bad, this and this has happened, and then they tell you, I need you to send me something. If at all you don't have that, if at all you are not working, it means that that parent will not get something. So indirectly, your parent relies on your income. So protection of wealth is basically for anyone who is earning a living from whatever kind of job that they do. And then we go to the third pillar, which is distribution of wealth. After we have accumulated this wealth, after we have distributed this wealth, what happens to, after we have accumulated, after we have protected it, what happens to this wealth? After maybe we are not there, we are supposed to leave a will whereby this wealth will be protected in the right shares depending on who we have put as beneficiaries. So when we were talking about life, we cover those risks, the ones that I said, and then we make sure that we are giving you what you want depending on your need and also depending on the affordability, so that we can be able to take care of you, and also we also maintain the kind of lifestyle that you're living as we look forward to making your future
Okay, before
better.
we get deeper, because we are coming with more details as far as insurance covers are concerned, because they are broad. There is one question from one Reen and I think Carol is going to do the same.
There's Reen Antos saying, good evening everyone, getting inspired by today's show. I'd like to ask our guests to tackle on benevolent type of insurance.
Benevolence.
It's okay.
Benevolence. Okay. This is whereby we want we want to leave an estate. In case I'm not there.
Who will be
legacy?
Responsible for
Exactly. What legacy? And this is the third pillar about the distribution of wealth. Whereby this benevolent fund, it's whereby someone starts saving something. They start putting something aside so that in case they are not there, their family has been left with a livelihood. Because even the Bible says it's good to go back to the roots where we come from, right?
It's good.
I'm a Christian, and what we say is that a wise man leaves inheritance for their children's children. So we have an insurance that we call it benevolent, and most of the times you find different underwriters and underwriter. They understood. Actually, I wanted everyone to make sure they understand. An insurance company is an underwriter. So maybe all the companies, they are underwriters by depending on the kind of business they underwrite. So it means that this person, if this person passes on, they shall leave something for their loved ones, and then they can still enjoy their livelihood like this person who was still alive. So that is what we talk about, the benevolent fund. Yes.
So I'd like to ask, talking of risks and damage, is there any step that you should follow while determining a probable risk, such as, for example, you're having a business, how will I insure for fire and leave alone breakage?
Okay, when we talk of, when we are insuring property, we usually combine insurances. We cannot do fire without burglary. Yes. We call fire and burglary, and there's no way burglary we can go without fire. We insure the two of them as one cover.
Okay.
That's well understood. I think you are touching more on life insurance or life assurance, and there's something you had left, so you can pick up on the same.
Jeff, I'm getting old. Kindly take me back.
All right. So before we get back to the same thing, because I was curious on an issue of whereby you are covered against critical illness. So critical illness and maybe the issue of payments. I think it's you who know the terms of insurance.
Called premiums.
Not premiums, but now it's like what I'm earning, I insure what I'm earning. So you understand the question?
Yeah, sure.
So how does that go?
Okay, when we are talking about life insurance, we usually have different products, and each of these products they have a life cover. In that, in case of the customer passing on, we shall pay their beneficiaries. We have different products like education. We have others for investments. We have others for retirement, but they serve the same purpose. And on these covers, we usually have something that we call riders. And the riders in a policy, in a life policy, we usually have a rider on disability. That means if at all Joyce was not, maybe she got into an accident, or maybe she got an illness that led to her being disabled. It means that the insurance will take care of her and the needs that she had insured. Number two, we have critical illnesses, and there are some illnesses that we term critical in insurance. In insurance, we differentiate, even death, we differentiate it.
It's a kind of death.
We even differentiate death. So the illnesses that we term critical, we have cancer, because we understand what it would cost a family when someone gets cancer.
Let's have details for cancer. Suppose you are injured. No, or before we go further, is there another sickness that you yoke closer to cancer?
No.
And does the terms mean the same or stand the same?
No, cancer is just cancer.
Okay, let's have details as far as cancer is concerned. Now, suppose someone wants to be treated or wants to insure against a cancer attack. Let's have the financial details, the accuracy and the tangibility of mathematical numbers.
Okay. As I had started saying, when it comes to life insurance, we are dealing with age, dying very early, living too long, and disability. So I'll keep taking you back there because those are some of the basics. And when it comes to each person, depending on their age, because we use mortality rates when we are calculating insurance premiums. And premiums, we mean the savings maybe the person is using, maybe the money that that person is paying for insurance services, we call them premiums. So it means when someone is very young, they are young, it's very cheap for you to pay for insurance covers. And reason is mortality rate states that the older you are, the higher the risk. And the closer you are to dying. I'm going slow because I don't know who's older here.
It's well. I think those who are watching us and they are more actually interested more than we do.
Exactly. And then then the other thing is that is on the age. Age is very key. So when we talk of those illnesses, in the earlier days, we used to feel the cancer of this world, the heart attack, the kidney issues. It's like they used to affect the old people. Right now, you're getting even a child is born with an issue with a heart issue, maybe getting a baby getting born with a renal issue. Those are some of the areas that we call critical. And we don't cover a patient, someone who has already been diagnosed that they are unwell. Maybe someone already has cancer. Because what we are talking about, when we talk about insurance, I know that I have a risk. So what steps am I taking so that I can transfer this risk? What am I doing so that I can protect myself from this thing happening? So we take people when you're well, when you're not sick, and then when you get sick, we take care of you.
And now maybe I wish to have the cover tomorrow. Do you do any test to confirm my status before you issue the cover to me? Because I may have you giving me the cover tomorrow. Then after 1 week, I tell you I'm diagnosed with this stage or this level of cancer.
Okay. Thank you. A very good question. When we talk about insurance, I hear most people saying insurance is like salvation. We keep preaching and hoping that this person will get to understand. When we talk about insurance, when we take you in, there are some principles that we have in insurance. And there's one principle that we use. We use utmost good faith. We assume and we take your word
Yeah.
that Jeff will give us the correct information. He'll not lie to us. He shall be truthful, and the information that he tells us, it is the one that we are going to use. Not unless someone is maybe has stated they have this pre-existing condition, then we subject that person to medical tests, and then we see if at all it's a risk that we are ready to take up. But if at all Jeff comes and tells us my health is fully okay, then we just take you in and we put you on cover and we continue. And then if something happens, we may be diagnosed with something, as long as we had taken the risk, we go ahead and pay.
So for
but we usually have a waiting period for critical, for maybe death. For death, we have 3 months waiting period. So if you take a policy, don't die naturally in the next 3 months. But accident is covered immediately.
Okay.
Yes.
So for example, I insured myself like a month ago, then the risk, for example, my car gets it's stolen. Will you insure me while I've paid premiums for only a month?
No, when we talk, no, we were in life, now we are in general. The two types of insurance, they work differently. For life, you can be paying monthly, but for general, they are annual covers. They are only covered annually.
And even if on that note, before you proceed, I think you have to explain to us the third-party insurance cover and the comprehensive, because there is a way, because she said that suppose she is insured a car for only 1 month. I think that is third party, and it applies.
Sure. But now, when it comes to general insurance, if at all you have taken that cover and it's a comprehensive cover, that is an accident, and there's no waiting period for any accident. Even if I get insured now, and then just when I'm still seated here, I have been, the insurance has already underwritten my business, they have accepted my risk, and then the roof falls. They'll pay me. That's an accident. It was not predetermined. It was not something that was planned. Yes. But now maybe I answer your question about third party and comprehensive. When it comes to third party, we have covered that person. You are the first, the car is the first party. You as the owner of the car, you're the second party, and that other person now is the third party. So if you have taken a third party insurance, it means you and your car are not covered under that cover. So if anything were to happen, we will not compensate you. But when it's comprehensive, we have covered your car in full, and then we have covered third party liabilities, but you as the person is not covered. That is why we advise, even if you take an insurance, a comprehensive insurance for your car, it is very important that you have a personal accident cover for you and your family, because we usually say that cover, you have insurable interest. That is another principle. I know maybe you'll wonder these jargons. It means that insurable interest means that you have interest in the insured car. That means it will not cover you. Even if I were driving my own car and then I hit my own child, then the insurance will not pay my child, because the child has an insurable interest on that car, because we own that car. Yes.
Okay, there's a question from one
Dina Mwania saying, at Joyce, what happens in life cover if the policy holder is no more, and suppose he never disclosed the information to their next of kin as an insurance? Do you contact the next of kin ama inapotelea hivo? And second question, how long do you take to pay your claims?
Okay. Thank you so much. What usually happens, if at all someone especially maybe I go back when I say like this, I'm talking to about Jeff on life insurance and Carol about GB general. Okay, when it comes to life insurance, most of the time we say these are very private and confidential policies that we take because we are covering your life. And maybe someone might feel maybe when I see Joyce walking like this, this is 5 million that is walking because she has insured herself 5 million and I'm the beneficiary. And I am here struggling. And I can see the 5 million walking up and down, and I say, what if I were to do away with her? Then the 5 million is in my pocket. So what usually happens, I know these policies are very private, and sometimes some people will not disclose even to the beneficiaries that they have taken these policies for purposes of safety. But what usually happens, we keep monitoring the premiums, and premiums are the savings as they come. We keep monitoring them. Allow me.
It's okay. Yes, it's okay.
So Carol, you see the importance of insurance cover in someone's life. You, as I mentioned earlier when we started the show, is that most of the times you find yourself insuring almost everything of your life or that you have in your life. So that's great. And I think
I'm going to insure myself.
Yeah, very soon, because we have the company itself on EBN TV tonight. So welcome back to EBN TV, Joyce.
Thank you so much. Thank you so much. Okay, what I was saying is on covers being private and confidential. If we see the premiums are no longer coming, we contact the next of kin. We contact them and get to know what is happening. Where is this person? If at all we try to reach them and we can't be able to reach them, we get to the next of kin. If sometimes you might find we are not even getting the next of kin. When we don't get the next of kin, we even go a mile ahead to get to the institution. If this person was working with a certain institution, we get to know where is this person. If at all we don't get them from the institution, we can even go ahead and maybe inquire from the areas that this person was living. And that's the main reason as to why it is very important for all of us to always have an agent. When you have an agent keep contact with the customer. And when an agent leaves one company to another company, we always give that customer another person, another agent to be servicing that customer. So that this customer already has a contact person throughout the time that they'll be maybe saving with an insurance company, because when it comes to life insurances, the shortest term, as I said earlier, it could be 4 or 5 years. So these are long-term investments. So you need someone to always be in contact with you. Maybe they'll remind you your premiums you are due. Maybe they remind you now it is time for your maturities. And that brings me to the second question that Carol had. How long do we take for us to pay maturities? In most companies, what usually happens, we prepare the customer a month earlier. We tell you by, like now we are on 22nd of September. The maturities that are coming in October 1st, they have already started being paid. The customers have already been sent SMSs. The agents have been given their maturities. The customers that are maturing in October, and they have been told contact this customer so that they can send the current maturity bank details so that we can now start paying the maturities, so that by 1st all the payments have been done. And in case maybe there's something that has happened, maybe it's a death claim or something, how long does it take for us to pay that claim? It depends with how fast is this customer for them to fill the claim form, and then for death we must have the death certificate. And I know sometimes it's taking 3 to 4 months. Once we get the death certificate, then there are some other requirements, like maybe if at all it was an accident, we get the last person who who attended, the last physician who attended the patient. They give us a report, and then we are able to process the maturity, and we pay it to the beneficiary.
Okay, satisfied.
So Joyce, suppose I had insured myself life insurance, but yet I had insured my car, but I happen to die. So what happens to the insurance of the car? Do you give it to the next of kin?
No.
What happens?
What usually happens, you see, the car insurance is different from the person. It is not your life that was covered. And then when this insurance for the car, if the car gets an accident, how do you, who lodges the claim? And the person is dead. So it means this insurance, it is usually cancelled so that the other person can become the insured.
Okay.
And if at all maybe the car insurance had not taken more than 7 months, there's a refund. We prorate the premiums and we refund. But if at all the car had stayed for more than 7 months, then we cannot transfer that.
So where does the refunds go yet I'm dead?
We always have a number of a next of kin, and most of the time you see this person will still come to us to claim. Yes, but for the car insurance they are usually not very complicated, because not unless the car has gotten an accident, most of the time you'll not find someone, maybe it's the customer who will come to look for you and not the other way around.
Right.
Yeah.
There's another question from
Austin Muthoka saying, following from Buruburu, how do we identify a legit insurance company, because some of them refuse to insure you after an accident?
Okay, insurance companies, we have our regulator, which is IRA.
Yes, I was about to ask the same question, and that was almost the, because I think it's the umbrella of the...
Exactly.
Yeah, okay.
It is our regulator, and most of the time, maybe I would think what he really wants to ask, it's their types of underwriters is only the insurance company, but they are intermediaries. And the intermediaries, we have agents, we also have brokers. Yes, and maybe he's referring to brokers, whereby you might not know, is this broker really a legit one? Sorry, again?
It's okay.
It's loud.
Yeah, it's loud.
Yes.
Thank you. So when it comes to insurance companies, they are always listed under IRA. Even agents, our licenses, they are renewed. Actually, we renew them in September. So by end of September, you can be able to tell all the insurance agents that have been registered for the year 2025. Not even 2024, 2025. And all the insurance companies that are listed by the IRA, they are always listed. If you go to IRA website, you can be able to see that. Now it becomes tricky when we are dealing with the broker, because the broker sells insurance on behalf of the underwriter, which is the insurance company. Do
you have any risk when we are dealing with the brokers?
Most of the time, the main risk that is usually there, it is I as the customer have paid full cover to my broker. And then the broker, because they have a relationship with the insurance company, maybe has paid less or not paid. In case I get a claim, will the insurer pay me? They'll not pay me because you have not completed paying of your premiums. But in this case, you have paid maybe the broker or the agent. And most of the time what is happening, we are making sure that it has been digitalized. Our selling of insurance has been digitalized, that the cover that you get, it comes directly from IRA. And we work with two bodies, that is Association of Kenya Insurers and Insurance Regulatory Authority.
So maybe Joyce, you can, maybe there's someone asking, if I want to insure something or I want to insure myself, what are the steps am I supposed to follow till I get there, until I'm insured?
Okay, it will still be different because when it comes to a car insurance, maybe I might say, maybe we nowadays dealing with digital, that we are in the digital age, whereby I would just send you the form, you just sign the form. If at all it's car insurance, you sign the forms, and then I direct you how you pay the premiums, and I send you the insurance cover directly on your phone, and then you're insured, and it doesn't take long. When it comes to also life insurance, I would also maybe we'll have that engagement. We agree what product do I want. I want a school fee solution. How old is your baby? I take you through. This is the match that you're supposed to pay. This is how you'll be paying, and this is the match, and these are the forms. These are the requirements. You just do the forms. You send me the forms. I create you in the system. We issue you with the policy documents, and you're good to go and you're covered.
So in terms of premiums, how do you go about it in terms of determining after how long should I pay it and how will I pay it?
Okay, we usually agree from the word go. When it comes to general, we've said these are annual cases. When it's maybe we can use third party or the motor insurance because it's most commonly known by almost everyone. When it comes to third party, we can agree. I want to have just 1 month cover. I tell you this is the match that you're going to pay depending on the institution. Maybe it is they pay 2,000 for 1 month. You pay the 1 month, so the following month you pay the other premium. If at all it's annual, you pay once or maybe twice, and we agree from inception. So in insurance, there's nowhere in between. It's what we've agreed. When it comes to life insurance, I can pay monthly, I can pay quarterly, I can pay semi-annually, I can pay annually, or I can pay a full single premium. Maybe I say I'm taking a policy for 10 years, but I want to pay it one-off, and I pay it one-off. I can either be using M-Pesa, pay bill, maybe I can use a bank deposit, maybe I can use bank deduction, or I can be deducted from my payslip. And those are the modes of payment.
Okay, so before we get to our comments, we're getting back to reading some of the comments we're receiving from the viewers out there. And as we come back, we want to know the challenge that you are, or how are you navigating through the emergence of technologies like artificial intelligence and blockchain at the same time. So that is, be keen and be ready to listen to what our guest tonight will be talking about, the issue of the emergence of such technologies like blockchain and AI after the comments.
So we are receiving some comments from our EBN TV posts. That's Queen Moito saying, watching from Machakos show iko fiti. Purity Mutheu saying, watching from Kajiado. There is Rin Antozu saying, thank you so much for elaborating my question. I've now understood better. That's from a question we had read earlier. There's Ken Olesaina, what a beautiful show. Learning a lot. Big up guest Joyce. There's Dorcas Kavoy saying, following the show from Buruburu. There's Carol Omutubula saying, from Buruburu, be blessed. There's Jacqueline Maundo saying, following closely from Buruburu. There's Mothoka Meshak saying, from Harambe Estate, thank you for the show. There's Angela Kitondo saying, watching from Jericho Eastlands. There's Ndanu Felista, always our big fan. Following the show from Kayole. Douglas Munyoki saying, watching from Harambe Estate. And there's Dina Mwania saying, good evening from Buruburu. Buruburu is well represented. Karibu sana Joyce at EBN TV.
That's great, and I see our time is almost lapsing, but I just want to, within 1 second or 2 seconds, to uncover and to ask the emergence of AI and
the
blockchain. Yes.
Okay, maybe what we usually say when we are selling insurance, as much as it's an investment vehicle, what we usually say, each vehicle, they usually have a different purpose. When it comes to protection, the blockchains will not give me protection, but it's a good investment. And the risk involved, it will depend on me as the customer. How is my appetite to partake the risk that is involved. And when it comes to even other these other vehicles of investment, I know sometime you'll give me some opportunity, maybe I come and talk about financial planning. Because when we talk of financial planning, we talk of all the different vehicles of investment and their purposes and what is their importance. But each vehicle has its own importance, and there's none that overtakes the other. So I still say insurance is a need that each and everyone has, and everyone needs insurance, and insurance is not a luxury, it is a necessity for anyone who's earning an income.
Okay, and it has been a great show tonight here, understanding the dynamics of insurance with our guest tonight being Joyce Kamau. And because of time, I think she'll be giving a final word, and maybe you say I to 3 or 4 people.
Thank you so much, the people that for having me here at EBN. It's been a pleasure. I've really had very good engagements, and it's always good to educate people about the importances of insurance and what can help them when it comes to insurance, because the knowledge that we have and the penetration that we have of insurance is around 3%. Because you find the people who know about insurance, they continue partaking insurance. The people who don't know about insurance, they continue fearing and running away from insurance. So it's good that we are learning, and when we get enlightenment, it is, we always say that knowledge is power. So we are empowering people, and we are getting empowered here at EBN, which is a very great great opportunity, and also I'm very grateful. And the people that I would want to say hi is my family. I can say hi to my 5 kids who are watching me, and also their dad, just to say hi, and the people that I work with, and telling them that insurance is where we belong, and we keep educating our nation on insurance.
Okay, that's great. And next time, I think you shall tell people where you are available and where they can get you.
Indeed, it has been a great show with Joyce Kamau, where we've gotten to learn a lot. Hope you've gotten informed from our show today. And remember, the conversation doesn't end here. We're going to invite her again. So if there's any question that you feel like we've left out or we haven't tackled, you can send it on our social media platforms. That's on YouTube, The Legend Productions, and on Instagram and Facebook, Jeff SOMBA The Legend. Till next time, I've been your host, Caroline Muthoni. Have a good night.
That's great. And you've forgotten to regard our director.
We have our amazing director, Ken Olesaina, and the camera people behind the scene. That's Mona and Moses, and there's our manager, Fred Njiri.
And we are so grateful, and we appreciate so much for you having a time to watch, listen, be educated, be informed, and get a knowledge of the issues and the dynamics of insurance. Until next week, I've been your host, Jeff Kimayu. Have a great week. Goodbye.
Bye.
Bye.